Here's the big question that everybody's always wondering. An LLC, a C Corp, or an S Corp? What's the differences between these? How do I go about navigating this? And these are all different types of companies to create. I guess the one we left out was a sole proprietorship or a
Sure.
partnership.
Or a partnership or a limited liability partnership.
Yes. Or a
Right.
family limited liability partnership.
Yes.
No. We'll
No,
leave it actually.
we don't need to go there. In fact, if you were to put up,
we'll make them simple.
yeah, in fact, if you were to put up three choices right now, just on the original three, LLC, C Corp, S Corp, we could immediately cross off S Corp, not because we're not going to choose an S Corp, but there's a common misconception that S Corps are different than the other two, when in actual fact, S Corp is a tax election you can make as either a C Corp or an LLC. In other words, an LLC could be an S Corp and a C Corp could be an S Corp because S Corp is a tax election. We call it check in the box, right? So you're checking the box.
Checking off of a box on the tax form, right?
Yeah, exactly. It's actually, I mean, that's where it came from, right? But it's a little more complicated than that, but that's where the expression came from. But you're basically electing your tax treatment. So really the question is, do you want to be a C Corp or an LLC? Now, most of the time, LLC is usually more flexible. It's a little bit more forgiving on the formalities, although I actually advise that people continue with the formalities for asset protection purposes. In fact, we even offer a service where we do them for you. We help you with your board minutes and things like that, just to make sure that you're kind of doing that stuff, just because it's good to do it. But C corporations are much more rigid in that formality, whereas, LLCs, you have a little bit of leeway. But either or can be an S Corp. So why would you want to be an S Corp? For a lot of sellers, being an S Corp would be ideal because you can save taxes. And who doesn't want to save taxes?
I do.
There you go. Right. So how do you save taxes? Right. You can legally save on. Well, I only promote legal ways to save on tax. I don't. The illegal way to save tax.
I don't like to think that every way of reducing your taxes is against. Some people don't know that, but it's like,
yeah, no, I mean, Wesley Snipes went to jail because of that, because somebody convinced him that there was a constitutional argument that you can't pay tax.
That's Peter Schiff's dad. He's the one who planted the flag and said, I'm never paying taxes against the Constitution.
The IRS hates that.
Lost.
They will throw you under the bus. And the reason they went after him because he was a public figure. And so they wanted to make an example of this whole notion. They call it tax protesting. But that's not what we're doing. We're not going to be tax protesting. We're going to be tax paying. Just tax paying smart. And so with an S Corp, S Corp to me was kind of a dead vehicle. I never really thought much of S Corps. Kind of like, who does S Corps anymore? And it really wasn't until I started helping out Amazon sellers and smaller businesses that I really kind of came back into my, sort of purview as something as a preferred election. And that's because S Corps have one unique thing that LLCs don't. You can make a partnership election on an LLC. You can make an LLC taxable as a partnership, which in many ways would be very similar to an S Corp. But there's one thing you can't do with an LLC that you can do if you make an S Corp election. And that's limit your withholding tax. So as long as you pay yourself a reasonable salary, right? It has to be market, it can't be made up. You can cap your withholding taxes. So the payroll taxes we pay, like FICA, Social Security, those things, you can cap that to that salary so that any other distributions you make out of the S Corp are not subject to those withholding taxes. Now you still have to pay income tax, but you don't have to pay all those little withholding taxes that we all hate so much.
So simply that means that essentially if you are just an LLC, basically all the income comes in as ordinary income, correct?
Subject to this special withholding tax.
Social Security and whatnot. But when you do an S Corp, it is part are wages and part are like a dividend, not taxed at dividend tax rate, but just not subject to those, right? Or it's like a distribution.
Yeah, it's a distribution. Exactly. Important distinction, not taxed at dividend rates. It's still your ordinary income. It's just not considered your salaries and wages and not subject to all those withholding taxes. You can save, 3 to 7.5%, depending on what you're paying yourself. But I mean, if you're running a $10 million Amazon business and paying yourself $25,000 a year, the IRS isn't going to like that because they're going to think you're understating your income, right? So you got to pay yourself a market rate, but you can still save a substantial amount of money, thousands and thousands of dollars easily. In fact, I had a seller reach out to me the other day, who was telling me he made the S Corp election and he saved 13 grand a year. And you might even be able to make a late S election. So if you haven't made it and you're kicking yourself, we might be able to help you there too. So yeah, for a lot of sellers, again, can't tell you exactly what to do. There might be other reasons, but for most sellers, making an S Corp election is a no-brainer. I mean, it's an easy way to save money on taxes, and the government, they do crack down on that salary thing, but as long as you're paying yourself a market rate salary, not trying to game the system, you're fine.
Yeah. And there's rules. And if you follow them and do them the way they're set up, yeah. So there's like some extra stuff you have to do if you're an S Corp, or you have to do different payroll.
Yeah, and that's a perfect accounting question. But yes, there's like, you have to have a distinct payroll, right? You have to pay yourself a salary, like a payroll, right?
Yeah. So there's some extra things, but like, when would somebody start to think about an S Corp or think?
I mean, usually once you start making money, right, you should probably think of, once you're making enough money where you can pay yourself a market rate salary. If you can afford to pay yourself 75 grand a year as the owner of your company, then you should, not saying that that's the number, I'm just saying you should definitely be an S Corp at that point in time. Again, if you're not a U.S. citizen, you can't be an S Corp. S Corps have to be very careful when dealing with subsidiaries of S Corps. There's just Q subs, things like that you have to deal with. But for the most part, it's pretty straightforward. But, you know, the nitty gritty stuff, I don't deal with too much. But I mean, it's pretty much just paying yourself a salary, having a payroll, and, you know, again, you get to cap your withholdings. Otherwise, you're paying the full Social Security, Medicare on every dollar you make. And that's not fun. Nobody wants to do that.
Awesome. Definitely something interesting to talk about. So that could happen. Oh, so then I guess now here's the other question of, like we talked about, an LLC and a C Corp can both be S corporations. It's a tax election. From what you see, is that most people, like smaller businesses, tend to go LLC. Obviously, every situation is different, but is there a case for the C Corp these days?
It really depends on ownership structure. You know, there might be a reason just due to the unique ownership structure. It really, you know, for the small business, you know, the C Corp is kind of a dying breed, you know, and in fact, when I meet sellers who are operating as a C Corp, oftentimes we wind up going into a restructure because usually it's a C Corp in a bad state, just like a really bad combination, like a New York C Corporation, bad idea. New York, anything really, bad idea. But you know, even if you're a New York business owner, unless you're owning real estate, I mean, really should not be a New York anything. You know, I like Delaware. This is not legal advice, but, you know, certainly feel free to give me a call and we can talk about my love for the state of Delaware, for the first state.
Purchasers like Delaware, from what I've heard.
Purchasers do like Delaware. They do. But, you know, Delaware has something that other states offer, but Delaware has a really great body of corporate law because they are sort of the corporation state. And they also offer charging order protection, which a number of other states do, which, you know, limits the remedy to a creditor so that if a creditor tries to go after your company, they can't just take, you know, in state of New York, for example, a creditor might be able to take over your company and force liquidate everything, fire everybody, and just, you know, gut your company. Whereas in Delaware and other states too, you know, Delaware says the exclusive remedy shall be a charging order, which means that all they can really do is sit out on the sidelines and wait for you to make a distribution before they can take any money from you. And so obviously you're probably not going to make a distribution at that point, and it protects folks, and it's a great deterrent, and it's a great way to get settlement. If you're in a dispute of, you know, in a creditor dispute and you want a settlement, you're going to want to be in a place where you have charging order protection as a sole remedy.
So if you guys want to know which state to file in, watch that video, which will be next. That was a teaser.
Yes, coming soon.
Awesome. Yes. Paul knows a lot, as you can tell, and he likes to talk about it in his free time, which this is. So we'll get into that next. Thanks, Paul.